Okay, good afternoon traders. Welcome to TradeSetup and the live stream for the, what are we now, the 20th of July. Hope we're all doing well. Enjoyed the last few days. Been a bit of a bouncing around quite a bit of bit choppy price action, but we'll take a look at that today. We'll just see if they can kick on from here. US is looking quite positive, so they keep making new highs. We keep chopping around, so it's interesting the way it's going at the moment. So how are we going, guys, in the market? So far, so good. Hope we're enjoying it. So for anyone that's new, there's a few new people on here, potentially. We've got what you can see on the screen. We don't give any advice. We just got a general advice warning, which you can see down the bottom of the screen there. Also, if you like, you can join us on Twitter. We're trying to get a bit more active there. I've really just got to start posting a bit more, really. So just keep an eye on that. We do we have in the past put a few little articles on there, which we'll try to continue and just really get a bit more active on that respect. Also, top right hand corner, you can join us on Facebook, and on the bottom right, you can subscribe to us on YouTube. And that just means that if something happens with the the app, if it's not sending an alert or whatever reason, you'll actually get something from YouTube as well, just when we press the button to go live when we start streaming. So you'll get a warning there, a bit of a heads up. Any questions on that, feel free to whack them into chat. So today, what we'll look at, as per usual, just go over what's happening in the markets. Take a bit of a look at the ASX200, just see what that's doing. Might even just flash over a couple of the currencies. We've had a few alerts on that. We sent out the weekly FX review yesterday. And we haven't done that for a few weeks now, just because we've been up in Queensland. It was a bit hard to get that recorded, but they've kicked on nicely. We've got the Aussie kicking on nicely. The Euros just keeps squeezing people out. So there's a lot to be said about that short squeeze, and just keep an eye on how traders are placed. Anyway, so we'll take a look at a few of those. If there's anything anyone wants to chuck up, just feel free. Even during the stream, we're going to talk about a few things today. Just whack it in the chat. Any questions you may have as we go. What I want to focus on also today is just going to take up a look at a couple of shares and just look at the price action, the price structure, and why it's important, obviously, but the secondary moves, which a few people, the way my style of trading, a lot of the times I'm looking for confirmation, which can tend to be in the secondary move, but even when they go hard, there's great opportunity, and we'll just show you a couple now that, in all fairness, I have missed, but there's something that has been on the watch list. They were on the watch list for a while there, and then just showing that secondary move and how it can actually pay off, still get a good risk reward, 2 to 1 at least. So what we'll do now, we'll get over to the charts. I'll get my face up today. I've managed to hook up the video again. Just remember how to do it. Here we go. And it's that one. There we go. There we go. Let's get rid of that now. All right. Anyone that's following us on the app, you'll see that's MBE. Potentially taking a partial today at 10.5. For anyone that doesn't know, we spoke about this. Davin especially just mentioned this type of strategy for a lot of people. Sorry, let me just mute that. A lot of people trade around that 10-cent mark, and that's because prior to 10 cents, you get those increments of 0.01. So it can go from 9.5, 9.6, 7, 8, 9, hits 10, and then it jumps up in half cent increments. So they tend to play around with that, buy just below, and you're selling it at 10.5, potentially 10.2 mid price between the bid and the offer. And it's a good little percentage gain, and it's a good play for a lot of traders that are watching out for that type of thing. Now, MBE is just banging around that 10-cent mark at the moment. We were long from 7.6, I think. 7.6 cents. So kicked up nicely. So far, we're sitting on about 20 or 30%, 25% gain, I think. But we're looking for a partial. What is it? Oh, 30. Yeah, it's about 30% gain at the moment, sitting on that around 10 cents. Just looking for a partial at 10.5 cents. So hopefully it just triggers above that. But they are starting to just muck around with it around that. You can see it's 9.5 to 10. Sorry, 9.9 to 10 cents. So when it goes bid 10, it's 10.5, and they start hitting the mid price, just matching off in between. But that's an interesting little one. So I'll be keeping an eye on that just while we're speaking. Now let's get onto the ASX. We'll get up the chart. The XJO. Oh, that's not it. You can see we're really just focused in on this area. You can see that price action, the way it's acting, it's contracting. To me, that's starting to look better each day. Even though we get a couple, it gets knocked on the head a bit. For me, if you've been following what we talk about in the morning alerts, I've been biased up a lot of the time, just because I think, there's sometimes it just doesn't work out, which is fine. But if you're intraday trading, I'm inclined to be biased up. Sometimes that these sell-offs, they happen on the open and then they grind higher. They might still finish down, but during the session they can actually grind higher from the open. So you get that initial reaction and then they grind higher, and sometimes wash out the highs and then they just have a bit of a pullback and then build a little higher low during the day, during the session, and then kick up towards the end of the close. So I'm inclined to be biased up on this in this market anyway. Gunning for that 6,000 mark. I've said that for a while. We're in a good little zone here. So going back to the daily, I'll just drill in on it a bit, and why it's interesting for me. So that 50-50 way down here is that major high low, and what we're looking for now is this area to be a potential high low, and I think it's showing some really good signs. Let me just draw that up. What's everyone else's view? I know some are expecting it to roll over, which potentially could, but I think until the US stops making new all-time highs, that's not what I want to do, is it? Stops making new all-time highs, then this market's probably still going to grind higher. We're a bit more reluctant to get up there, but you can see this top of price section, we've hit down on a couple of key levels, and that one there, 56.75, is one for me, and we got that washout. So back here, I think is when the action, that consolidation started. It is choppy through there, and I'm guessing a lot of people get caught. You're still not 100% confirmed just yet, but I am, like I said, biased up just at the moment, and I think we've got a little key level starting to form around that 57.75. So price action, we washed out that highs, only a minor, 59.50 highs, just took out the previous high, then roll over, took out that higher low just in here. You can see with this move down, and then we got down to this support zone at 56.75, washed that out again. So you can see that price action there was rejected through there. Did open, test lower during the day sessions, and then pop back up. Then we got a couple of days later, took out this key level to this trend, this move down, that anchor level at 58, popped up. So that for me was really the first heads up that this move down is probably finished. As we're going to start getting some buyers step up, potentially anyway, and then move that market higher. And we have been choppy. We keep retesting down at that 56.75. And we can see these lower highs that are holding, but we're also getting buyers stepping in. So the more that buyers are stepping in, the less likely that that's going to head south, and we start to get more buyers joining the fray and really starting to push that market up. That's what I'm expecting anyway. That's what I'm expecting, hoping, whatever you like to say, for that market to grind higher. We have had, through the alert service, we do a trade setup, we have had a few shorts in play too, just because when you're in this type of price action, you don't quite know. Don't mind having a few shorts, because this thing could have easily rolled over. It still could from here. We could hold that 57.75 and roll over from here. So not a bad play to have a few shorts in the portfolio if you can, if you're trading CFDs or warrants or options, whatever you want. Not a bad idea, just to keep things a bit more, what do you say, not leveraged. I like that. That's like a daddy joke. Short on believers. Boom, boom. Yeah, so I don't mind having a few shorts in the portfolio just to spread things out a bit. And we've had one on Telstra, which has gone well. Took a partial yesterday, and I think it's still hanging around down there, if I'm right. Let me just go back. So we had it at 10. Got through 10. We had it originally at buyback at 405, just a partial, but it was just looking stretched. If you look down there, that was looking stretched down there. So I thought yesterday with that negative price action, why not take a partial, see what happens. Still hanging down there, so we'll see how that plays out. The other short we had was BXB, which did well too. So in a market like this, when it's starting to get that negativity, potential negativity on the overall market, not a bad idea, but picking the good ones, picking the good setups, and just remembering that the action on the short side can be a lot faster on the long side, and just to be on the ball. So it's not for everyone, but sometimes it can really pay off nicely. Now that was a long way around, wasn't it? But anyway, what I'm looking for from here, if you can see that that's that level just at 75. We've had that move down. I'm just going to try to look at it. We're just up there at the moment, and we've got our support zone through here. What I'd like to see ideally is I'd like to see that just continue and bust up through here, and a bit of a washout there, and that's going to bring in a few more buyers, I'd suspect, and then potentially this type of price action when you get that contraction, it's going to lead to, I mean, if you're trading the ASX or if you're trading it longer term, you can trade this via the STW. Look for a buy opportunity off a minor high low or a continuation, something like that. That would be great. After that pop up, I'd prefer to see that pop up, because if we go down like that and you start buying it down here, that potentially could turn into a lower high, and bang, you're back out again. So I'd like to see that pop up. That's good evidence that we're on the right side of the market, and then just looking for the entry. If you're not trading that, of course, you're just looking for your stocks, some good quality stocks to go long on. Anyway, any questions just on that? Who believes me and who doesn't? If you don't believe me, tough. If you do, that's great. I just got myself a coffee there. All right, let's just look at, get rid of that, and we'll get rid of that. Actually, that's what I want there, isn't it? This is a 30-minute chart, by the way. That's on the, get rid of that. This is on the CFD, but the XJO, so it's mirroring what we're seeing on the SPY. It's, general direction. You can see this nice little support through here holding. Got a high low, and we're just pushing up into the previous highs at 57.80, so that's becoming a key level up there. I would like to see that pop through, and then, like I said, build another high low in this move up, and then just starting to drag in some more buyers and squeezing those short sellers out, because I'm suspecting there's going to be a few shorts that are built up through here, and you can see those major in here, potentially in here. That was probably a bit too sharp up and down, too much of a V, well, inverted V, I'd say. And then this action would have brought in a few short sellers, potentially back in here. These ones may have been washed out. If they're still holding, they're going to be feeling the pinch soon too if we break up through 57.80. So to me, especially after that pop up through this high, it's starting to look good, even though we've retested 56, 70, or 59, this zone, the support zone. So looking good. Get back to the, just to get onto the other majors. Dow, you can see that wasn't a new high yesterday. I thought it was a new high. Have I not got the... No, that's right. So the Dow's kicking up. That's continuing on, just squeezing out, and it's off a nice solid base through here, and that was good part of 1 to 2.5 to 3 months that it worked through this zone. Just consolidated through there, holding these high lows, just bringing the sellers, squeezing them back out. So that could potentially have more to go if you go from this low to this high. Extrapolate that out, probably not too far, but we could be running into a bit of resistance soon. On the broader market, S&P, new highs, looking good. That's really just going to be a big washout up there. It's extended up here too, so we'll see how that goes. I think reporting is doing better than expected. That's what's really pushed this market on higher. FTSE, if you're an intraday or shorter term trader, is looking good through here, through this high. If anyone can see that. I've only just saw that myself. So if you can see, might be a bit harder off this low, so that's your contraction lower. We popped up, potentially a high low here, and that's confirmed once we pop up through, maybe a close through that previous high, this previous high just in here. So that's looking good. It's a bit like this, if you see, this price action here, when it's popped down, it's washed out a few players with this move down. It's probably brought in a few more shorts, washed these late shorts back out, but it's got a whole lot of short sellers that are built up through here, potentially as fuel to move this market higher. And I don't know what it's actually, what are we, shorts to longs, what it's, well, which side of the ledger they are at the moment, which side they're stacking up on. I'm hesitating to say that it's on the short side, but we'll see. So that looks good. That's the FTSE. I think that's going to continue on high. That's a beautiful, actually that's a great little price structure. It's getting a bit long in the tooth on the weekly chart, but on the daily, it's still, even on the weekly, you can see the stochastics. That move down has been, the buyers are soaking up those sellers. That's looking great. What else we got? The DAX. Quickly look at that. Also, well, that's not looking so good, but if it holds a higher low in here, that could be a different story, and that could be starting to look quite nice. Get that on a weekly. Yeah, the weekly's coming into a zone there. It's getting a bit oversold on this higher low, on this sort of pullback in here. So we potentially just want to see that contraction, hold some higher lows and starting to build and look a bit like the FTSE when it gets up through that 12,700. And if it gets through there off a high low, you'd expect it to target new highs, new all-time highs. So looking good. Any questions on what we've just looked at before we get into a few other things? Lapse of options, all right. Just wanted to get through 10.5 cents on MBA. All right, let's. So what I want to look at today, there's been a few that honestly missed, but it's just want to talk about that secondary move when you're getting. What we always look for is when the market breaks, if it's contracting lower. So I like going from potentially if we can draw this up. Just wondering if I can draw it up. What I'm ideally looking for what I'm looking for is if the market's heading up, okay, that's trending higher, higher lows, higher highs, and then you get something like a complex correction, and a complex correction is basically when you're taking out that last anchor. And you might get something like this, and then it starts building again. That's ideally like what I'd want to see. And then you start getting that type of move there. All right, let me just get... So if we just mark that up on the key levels... Oh, let's just go that color. Make that a fine. So this is your initial trend up, and right here, I know it's going to do. It's going to do that, isn't it? That's not nice. All right, so that's your anchor. So that's what I tend to look at when it's heading high. You want to keep above the anchor. You want to see a potential high-low build, and then buy in the unknown, like we said a few times, for projection up to new highs. Now, when they make a lower high like this on the longer-term time frame, that's when you want to be careful, because as soon as it breaks through there, you potentially got something that's going to turn around. You've got that lower high confirm when it breaks down, and then that's where I would be looking for a complex correction. I'd want to be taking risk off the table, or just potentially just closing out of a position and just watching to see what happens. So what we talk about a complex correction, so if this is a daily basis, a complex correction on a daily basis could just be a continuation type of pattern on the weekly basis, where you're getting on the weekly, you're getting this same type of thing, but you're looking like this. So on a daily, this is a complex, but you're getting, if that's making sense, just a bit of a pullback, building another higher low on the weekly. All right, so what we're looking for, basically the way I look for things, is that first higher low to build, which is going to take us out of that contraction lower, out of that pullback, and start the fresh new leg higher. And we get that with confirmation on but basically a break of the anchor. So this, if we can just move that across, that there is now our anchor to the downtrend. So you've touched it, we've retested, we pull back, build that high low. So we're looking for confirmation when we're buying, when it's breaking through there. So generally what I look for on trades, or what I like to look for, is when it's coming out of complex correction. I'm trying to take advantage of that next leg higher. You don't know where it's going to go to, but if the weekly's heading higher, the daily is sort of contracting lower, we're looking for a push out of contraction on the daily to continue that weekly trend higher. And that's ideally what I'm looking for. It pops up, breaks that anchor, and then I'm looking for generally that first pullback to start buying into. And sometimes you get left at the altar, it just kicks on without you. It can kick on quite sharp, but generally there's going to be that secondary move you still can take advantage of. Sometimes they, I'll try drawing that up again. Sometimes they can be, if we've got that breakthrough, come on, that breakthrough, sometimes they can be quite deep corrections, and then sometimes they kick up a lot harder and they're shallow, and they start doing this type of thing, just consolidating the highs and then going. So it's hard to trade these because you do see that they've gone quite hard, and it's hard to bring yourself into trading those, but sometimes they can pay off quite nicely. So I want to just show you a couple today that examples of this type of price action when it hasn't just, it's kicked up, hasn't had that nice pullback that we like to see, maybe retesting the zone, maybe just holding above that zone. Sometimes it pulls back below, it just comes back into that below that anchor level. Either way, we've still got the initial leg up. This is the important one. This move up, when it breaks that anchor. So that's me, a heads up that something's starting. We're starting to see a move up out of contraction on the daily, continuing the weekly higher or whatever time frames you're looking at. And we're just trying to take advantage of buying in the unknown for when it's moving high and getting other people to start pushing the price up for us. So if we look at something like this now. Has everyone got any questions just on that before we kick it on? It's making sense. So if you look, that's the kind of price structure I look for. So there's obviously two ways to trade. You trade continuation patterns, which is just higher highs, higher lows, or you trade off a complex correction where you're trying to take that secondary leg up and just try to buy in the unknown and see what happens from there. Now the few that we have looked at, here we go. MBE, come on, kick it on, go through 10.5. I want to see that go bid 10.5, just to confirm. Anyway, what do we got? So the first one, if we just drill this down, this is a nice example that I missed. If we draw that up, now I'll just get that looking good again. That's pretty. All right, see here you could see, market's heading down, it's contracting low. That's your complex correction, your lower high, lower low, bang, 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 all the way down. So we're really looking for that last key lower high, which in essence is here. That key lower high to work from, because this, even though you've had this another level just inside, it's about 58, so it's popped back up, it's started to push back down, it hasn't made a lower low, it's actually made a higher low just in here. That's still your anchor, because it can easily come retest it and then start diving and building those lower highs and continue that trend down. So you just got to be careful of that. That's why for me the anchors are so important, because it's more confirmation. That last swing level, whatever you want to call it, we call it an anchor. That last swing level, once that's breached, that's when people who are short in here have to start taking notice. And anyone that's sitting on the sideline through this, that likes the stock for whatever reason, that's when, the heads up, something's happening. They could buy off here, but I think that's, for me, is too aggressive sometimes. It works out great. And that, in hindsight, worked out beautifully. But what we talk about, that secondary entry, after you get that push back up through the anchor, it's come down and retested, and you could have bought it just through here, potentially at 64 once you see it start. And that's, I don't know if you can see that, it's pulled back, and then you got that minor lower higher low just in around 60.5, 61. Does that make sense there, guys? So that's why I like buying it at 64, or you can just buy it on that breakout. And you can see that it's actually off trading that just in here, the way I would project it out. I just realised how many lines I'm starting to get on there. Let's just clean this up. All right. So once we get that breakout, I'm trying to project it where I think it could go, and I prefer to take this high rather than this one. You can do it two ways. You can either take that down, project it out to that high, and if you can take that distance out, which would be 46 up to 66.20, takes you from 60 to 80. Actually, it's bang on at the moment. So we're bang on, hit 80 at the moment. It has got the potential to go a bit further if you take it there, but that for me would be where I'd start looking for, if I've got a partial potential. Look at a partial up there, and you can see it sort of coincides with a zone just up at 82. So keeping an eye on that one for potential partial exit. You may see a reaction off 80, or you may see it just pop up to, it's only 2 cents shy of 82, pop up there and potentially react off that level there. So you can see how we're setting up the trade. The anchor's broken. We've got that push up. Our pullback's given us opportunity to get in. That's that first, If you can see, that's that first example that we talked about. This one here, or that there, when it pulls back, retests the breakout zone, and off she goes. It's not quite this one. I've got another example on P&I on that one. Bit of a heads up. So if you are trading conservatively on the breakout of 66, great, your risk is down here. But what I like to say, with buying off a high low, I think this is quite a good entry in that zone, just off this minor. You can see that minor high low just in here. Does that make sense, guys? Because you've got the breakout, which we like to see, pushed up, got that pullback retest. That retest is failing, and we're starting to get that next leg up. So it's the same type of pattern on what we've got here, is contraction lower, off a high low, as it is just here. You got your high low just in here. It's breaking up, and off she goes. So you can see that if you bought it at 64, your risk is at the same spot as if you bought it on the breakout, but you're getting a bit of a front running of that breakout. Now, if that doesn't break and it starts consolidating around those highs, you can take it off, small gain, lock in a, not a loss, I guess, but you're a lot better off than if you bought on this green candle and it just roll over from there and you're actually locking in a loss. Now, does that make sense there, guys? Any questions? Got things popping up on the other screen there. So that's why I like that secondary entry. It gives you some good opportunities sometimes. And that was a plum one. That was beautiful. NEA, the way it's kicked on. If we go to the other one, this is like an example of, I think, that secondary. If you happen to miss that, it's a bit tougher, this one, because there was no real anchor to that downtrend. If we look at that. Now, I was looking at this one for whatever reason. Didn't alert this one at all. I think I chickened out more than anything. So this one's a bit tougher. You can see that was a good little entry through there. You can see that that's touched down on its support. It's built that high low. Would have been nice through there, but even if you missed it, that's your first leg up. It's come back down, built a little minor high low, but then you've got this wedge pattern, and that's your secondary chance. You can go, oh, hang on a sec, potentially I've missed this. It's gone up quite strong. It's consolidated, held some highs. So if you get anyone that's expecting it to come down and touch 270, the breakout zone, or even a deeper correction, they're sitting there waiting. They love the stock. They're just waiting for that entry. It doesn't play out. This can sometimes be quite a powerful move, and you can see that once it got through that 95 to 3. It's that green candle, which probably hasn't played out. Hasn't shown too well. We'll just drill down on that. That's probably better, isn't it? So just in there is where we're getting, you can see that day when it's starting to hold, we've got through this inside level, and I always love to see inside levels like that little lower high, because you can see that if you bought it there, you're front running this breakout of 3. The very next day, bang, up she goes, 20 cents. So that's a great little gainer on that. But that's a slightly different take on the price structure. This one didn't so much have a lower high. It wasn't particularly, if we go back to, you can see it wasn't particularly just lower lows, lower highs. It was a bit different price structure, but it's been that secondary entry there. Your risk, you know exactly where your risk is. Your risk could have been at 280 with a breakout of that zone. Through here, you front run that breakout of 3. You've got your risk around 280. Nice 2 to 1 at the moment, I think, give or take. Yeah, it'd be 2, maybe 3, 2.5 to 3 to 1. So that you can see where the secondary entries can sometimes really pay off. As long as you know what your price structure, you know if there is a bit of legs in this stock, what could happen. You've got everything sussed out, and if we go back to the weekly, that's that level there. You can see this could look extended. Good strong move up, consolidated, lower high, lower low. Breakout in here would have been ideal looking at that weekly, but if you miss that, you still got that secondary move, because you've got the move up is generally split up. I like to think of 2 parts. So that leg up, probably 1, consolidated here, maybe 2, 3 parts to that. Pull back, so it's more of your complex correction there on the daily. But on the weekly, it's just a pullback. Then you've got your 1, 2, it's getting a bit extended up here, but you still get that secondary leg. So that's what I think Davin said in the chat a few times. Looking for that secondary move, you can still get a good opportunity in that. 2 to 1 trades, even better. Does that make sense, guys? Have I just rambled on? Now, that was just the 3 stocks I wanted to cover. So let's wait to see if we've got any. What we can do now is just, if there's anything you want to take a look at, I'll just have a bit of a look to see if we've got anything else as a nice little example of that secondary entry which we're trying to take advantage of. If there's anything you want to take a look at, just whack it in the chat now, any codes, and we'll get into it now. Just trying to think of another one that potentially could kick on. Not coming to mind. MXI. Just quickly going over this. I know it's quite small, but you look at that price structure again. If we look at that on a bigger scale, look at this price structure in here. You know, actually I like that. I find that's good because you've come in. If anyone's been following us for a while, you'll see this type of price structure is contracted lower. That's, as it's kicked up quite hard, that's quite good contraction. It's built those higher lows. It's even retested 40, the low, popped up, come back down, retested 40, and started to hold the higher low. Broke out through, really that's your key level through there, say 63. Pushed up, and now we're in that zone where we could easily on the weekly basis. This is a higher low. It's a breakout zone. There's a lot of factors lining up there. It's just a bit of a smaller stock. It's a bit less liquid than a lot of people like to look at, but keep an eye on MXI for a future mover. And you can see that what we just showed on the weekly, this type of price structure is starting to play out here. Contraction, lower highs, lower lows, and we're starting to hold the high low in here. So if we push up through 72, I think that's going to be on. We'll start targeting at least 77. And you can see, if we get through 77, you probably get something like this. We start getting acceleration. All right, so this is not really acceleration. That's just buyers stepping in, starting to step in at higher prices again, building a position. And I think you'd start to get these accelerated moves higher, where they take out the high by quite a bit rather than just pop through the high, have a good pullback, consolidate for a while. I think you're going to get these more severe moves up, pullback, sharp move, met with strong buying again, and up she goes. Targeting sort of 110 at least, and then up towards some of these other levels, 130, potentially the highs up to 140. All right. There's nothing anyone wants to look at. Could be a short and sweet session today. What's everyone watching at the moment? We're up 32 on the index at the moment. Another one we got that's struggling a bit at the moment. That's FIG, F-I-G. I think Davin calls it something else. I guess you can guess. CKF's one that kicked off today. That's spiked up through at 185.86. It's just pushed back below that now, but that's still looking good. I mean, if you look at that price structure again on CKF, we're looking for that zone to buy into. This was awesome back here. That's your weekly. Go back to a daily. That zone in there, you can see the higher lows holding, and it's coming into lower highs. So we're looking for that break out of contraction. As soon as we get that pop up through this level, then I think we actually did buy it through 5, and we got that nice strong move up to 660 or thereabouts. I don't know how much we took out of it now. AGL, WPL will do, Wayne. No worries. That's going to keep me busy. But if you can see that structure just in here, so we got that correction. It's pushed down, lower highs. It's popped back up, made a major lower high in here, lower low, popped back up. So that's your key level potentially at the moment. It's pushed back down, so it's close to retesting that low around 480. It's say a double bottom. Essentially, I'll call that. It's close enough to say, okay, that's retested. That's a retest fail. That's your double bottom, whatever you want to look at. And then you can see the acceleration through this previous high around 570. And then if we just draw that up quickly, the reason why I like this is that I didn't want that, did I? I think there's a lot of factors. Oh, cancel. This is what I like. You can see that's a good heads up that we popped through a key level at 570 off essentially a double bottom through here, through that zone in there. Popped up. We've come out of contraction. So that's your first move that, okay, potentially we come out of contraction. What am I looking for now? And then you can see this type of wedge pattern holding some higher lows. That's an inside trade through 586. So we're really gunning to see if we can push up through 6 and start targeting 630 and potentially up to these highs at 670. If you go to that weekly, which is probably not going to show too much just at the moment, that's going to take into new highs and then it could be on from there. But what we'd be looking for is this one, is that leg up, measure that out from this low to the high. Or if we can take, say 370 up to 670, $3. So we're looking potentially from 5 up to say just above 8 as a potential target. So there could be something in this one. It could be good. We just have to see how it goes, see how it plays out. But once we hit new highs, I think that's going to drag in a lot more players as well. So it's looking good. So far, so good. We'll just see how that plays out. All right. Any questions so far? All right, we'll do that in a second there, Will. What do we got first? AGL. All right, so that's good. We're seeing that contraction. So that's your complex correction, which you could be looking at on the weekly. And you can see when we talk about the MAs, a pullback to the MAs, it's really just pulling back to the mean, the averages. We got that. That's quite a strong leg up if you look at that on the weekly. And you can see here the volume's coming down as we're pulling back. So you probably start to see if we start breaking up. So that's really the selling volume. The sellers are in control at the moment. Drag that in. Sellers in control at the moment, but that volume's easing. It's getting held up. It's getting soaked up through that 24.50 to 25 at the moment, but there's still potential for downside. Nothing's broken. We haven't got any anchors broken just at the moment. Nothing's really led us to believe that downtrend is over, especially after that solid move up, this strong leg higher. And that's not vertical, but you can see the steepness. There's a nice move up, bang, straight back down, correction. That's boarding some more buys in here, and that has started to accelerate. So the steepness of that move is a lot higher than that previous move up. So that's getting a bit not out of hand, I'd say, but that's quite good. So you'd expect there has to be a bit of heat come out of that move before buyers are willing to start stepping up to the plate again. Whether it's where we are at the moment, that's your weekly. The weekly is coming down to oversold territory, so very good sign. And the fact that it's around at potentially a nice, it's well above these highs, previous highs. So it's a good little zone that, okay, heads up that something's going to happen here, or potentially could happen here. So we go down to the daily, see that contraction. I think there's a few, it's pretty obvious the key levels at that one just at the moment. What I want to do is, I did it again. Let's just drill in on that. So what we're really concerned with is this move down. Get rid of that. Don't worry about the volume. So we're looking at what's happening and what we could expect. So you've got to move down, pop up, lower high, move down, lower high, down to here. We're sort of around that zone in there. It hasn't broken it really. I wouldn't call this as a key level, those highs, but I would say if it pops up, if it holds off this low, we've washed these lows out. So that low there was taken out here, but not convincingly. Then it popped up. We had another go, popped up, had another go the last few days, but it's being rejected just below around that 24.75. So from here, this for me is the key level. 26, say 26.75, 25 was it? That's your support in there. So what I'd essentially like to see, we're just getting a bit of chop holding that below 25.50. I would like to see it pop up here, and then if we can hold a high low in here, there could be a potential to buy, but you're going to come up against that anchor. It is quite a ways away at the moment. So if you do get as opposed to this you'll be front running a break. You're assuming that it's had a couple of goes at this 24.75. It's getting bought up. We start to get a high-low build, and that means that you can see the MAs that they look like they're spreading still at the moment, which is not a good sign if it's on the downside. Not a good sign for buyers. You want to see these MAs start closing in, so that's why you want to see that push up, potentially that higher low, and maybe by then the MAs start crossing to the upside. You've got the daily then pointing higher, the weekly's higher. You had that reversion to the mean on the weekly charts. It's coming to a good zone, so we've got all these sort of factors playing, and we're starting to get in the right side when we see that higher low. But like I said, if you're trading it prior to a break of that anchor level, you just got to be wary. I mean, you can make something out of that. There's no problem. You can get that breakout in here. Your risk is just here. It could touch up there, up to retest, like we said, and then start falling away. And then you still got, maybe you get a profit, maybe you get a break-even trade. You know, maybe taking a small loss, because by the time if you do see a lower height, you just get out. And in that respect, you're giving yourself the opportunity to take an early trade in the unknown, front-running that breakout. Now, if you're more conservative and you get that, I like to see that breakout, obviously, but sometimes they're quite a way away, and you can take trades where you get a bit of confirmation in here. If it is going to break up first, then you just want to see that top of retracement, maybe a two-legged move, 1, 2. So you look for that, and then start to look for that high low. Does that make sense there? If I just draw that up. Just go back to here. So if we get that type of move up, maybe that two-legged move back down, and then start to look for your high low. And then I'd ideally like to buy in there because it has taken out that anchor. It has washed out, flushed out a few buyers. Sorry, flushed out a few sellers. Maybe brought in a few buyers. They may have got chopped up a bit. You've got this contraction lower, a major high low, and in that respect you would expect the daily MAs to be pointing higher after that. So does that make sense, the slight difference between waiting for an anchor breakout, a push through the anchor, as opposed to trying to front run a break of that anchor? It's a lower probability trade when you're trying to front run it, because it is a key level. It doesn't mean it doesn't pay off. It just means that sometimes if that does pay off, you can get some severe moves higher and you're in at the unknown and people are chasing their tail on the way up. But sometimes you do get caught, so you just got to be wary what you're doing, the differences between the two trades. So I hope that helps there, Wayne. We'll get on to WPL. All right, what are we seeing here? Okay, straight away, I don't like it quite as much, and I'll show you why. On the weekly, so after what we're talking about, I'm guessing you can see what we are talking about. I wouldn't, to be honest, I probably wouldn't be jumping to buy this at all at the moment. And I'll show you why. What we've got on the weekly, that trend is down. You can see the move down, built a major lower low, contracted back up, make a major lower high in respect to this one, up at 50, major lower high, bang, straight down. I mean, if you put that on a monthly, you'd see what I'm talking about. Major lower low again. And you can see this is starting to look a bit like this. Well, probably slightly different, but there's just one key thing that's happened recently which I don't like. So if this is contraction higher and we're going to get a major lower high, what are we looking for? Hard right edge in the trade. We're looking for failure again on the lower time frame. So this is the weekly moving higher. If that's the case, we want to see a break of the anchor. If you go into the daily, you can see quite clearly that's a move up. We've had a go and we're just broken down through. That's a key level. We're broken down through there. We're starting to get some weakness. And in context of this daily contraction higher, that might be the start. We might go up, retest 31, and then roll over and really start to push back down to 25, even continuing this longer term trend down. Does that make sense there, Wayne? Does everyone else sort of understand what we're talking about with the anchors? It's a bit like this. You got this here. It produced this leg up on the weekly basis. I'll just draw it. I'll drill in because I know it might be harder to see. Whoop, gone past it. Let's just draw that. All right. So this is wood side. So what we got is this level through here. It's broken up, it's produced this leg up, then we come bang straight back down. So really that's a key level that a lot of consolidation through there. For me, that is the anchor. I mean, you could say that hasn't really made a new high, but once you retest it, to me that's okay. Your anchor's here, then you're banging around in there, then you break up through there again. See, I'll just move my risk up if I was trading long at that stage. So for me, that's the key level around that 37. Then it's gone bang straight down through, and then you've popped up, you've retested it, and then it's produced that next leg down. So that to me is ideally what's happening here. Pull back, pushed up, just struggling, and it's headed south, broken through that anchor. So for me as a buyer, I don't want to see that. To buy continuation pattern, it has to make that type of price action, and then buying somewhere in there above. So it's making a high low rather than pulling back. For me, I don't think even if there's buyers in here, it could easily, you go down to the daily now. I'll just drag in a bit more data. For me, is that clear? Or do you want me to make it a bit thicker? That might be clearer. For me, this thing could easily drag in a few people, suck them in, and then spit them back out. It doesn't sound nice, but... So you've gotten through that anchor there. We could contract higher, as in we pop through. It's sort of doing this at the moment. We could easily go up. It drags in. People are going, okay, let's go. And then bang, it makes a lower high and then just capitulates. And you get this type of price action. It comes back in, drags in some people. People wanting to buy it. And then you could argue that that's going to go higher, but then you meet at that lower high. And I think below that, I think that could easily happen. And then it rolls over, ends up being a short. Does that make sense? And that's all based on a break of that anchor, because we've broken that and we haven't really done anything since. So anyone that's watching that in the long side that has been long for a while potentially might want to book some profits, book some gains, and this is your first heads up that this trend up is starting to break down. Money manager will save my butt. Exactly. That's it. You're not going to get everything right. I mean, I could be completely wrong. This could just go bang straight up through the highs, but on a scale of things, I'd rather get in on tried and true price action and take the prime trades. I mean, you've got so many stocks you can look at. You're always going to find something to trade rather than jump into something that you've been watching for a while out of just not wanting to be, you don't want to put in so much effort watching it and then miss the boat. So that's what tends to get people a lot, I guess. And it's got me in the past a lot too. Alrighty, let's get on to what are we going to look at next? LLC. Let me just go to see exactly where we bought it. So LLC is something we've got going. $17.25 was just up here. So this is more of a continuation trade. Looking for that continuation. You got the weekly starting to curve up. So if you take it, your first step back is just going on to the weekly. You can see this, probably, if you just purely simply looking at that weekly and what, if the market's heading higher, which it definitely is there enough oomph buying it in here for this just to go bang through those highs? And you look at that type of high low, or even just go back again, sorry. That's a massive base. It's pushed up. It's made these highs up towards 18. It's had a pullback, flushed a lot of people out, spent a lot of time. It's a good part of it's over a year actually in here just chopping around. I mean, it had quite a big range, but chopping around, building the high lows, dragging in some more buyers. Yeah, anyone that's bought it up here is taking profit, maybe sitting on the sidelines watching again. And you can see that's been spending a lot of time. And then you can see it contracting higher. It's buyers are stepping up, especially the start of this year. Stepping up at higher prices just below 14 to build that high low, and that's previously stepping up around that 13 off 12. So you can see it's holding higher lows. It's trading up towards that 14.50 quite a few times. So as it holds higher lows into that level after a nice contraction, that to me is looking really, really nice. So just remembering on the weekly, and if you look at that as a major low, and this is the previous leg up on a longer term scale, there's quite a lot of fat in that trade. Does that make sense why we're looking at it just there? Just off that weekly trade anyway, that weekly chart. So what we're going to I guess what am I trying to say? So if that's what I'm thinking, I am actually thinking that's going to break straight through those 1750 zone or 18, take out that high and into new high territory. Well, new recent high in the last few years territory. May do. We may do, Will. But if we just go down to that daily, this is what we're looking at. So for me, on that daily, we've had that strong move up. We contracted lower, and you know that by lower high, lower low, build this higher low, and start to kick up. So for me, even if I take that leg up there, from 1350, say, up to 17, extrapolate that out from this low. All right, I'll probably do that. Actually, what is that? That's 13.75 up to, say, 17, 13, 14, $3.25. If you take that roughly, that takes you to about, was it 19? Of that leg up, continuation, that's your secondary move. 1, 2. To 19, there's a lot of fat in that trade. So remembering the weekly was quite strong, a lot of fat in the weekly trade. Extrapolate that out, and don't forget too, what we like to see is this consolidation just below the highs too is quite good. So what it's doing in here, below the major high, I think it was at 19, 1770, say. This type of move, just consolidating and holding a higher low, just below a major level, it's giving it enough oomph and just go blast straight through it. So I'm expecting more of just that to punch straight through that 70 mark, and then you're going to get other people dragging in that potentially have missed the boat, expecting it to react off there. Until it breaks on the longer term below 1575, then I think it's all over, and you have to do longer term waiting. But what we're seeing is that leg, just go push back in, that leg is holding higher lows, is looking good. I think it's going to go get through that 17, 40, 50 zone soon, and we're just really just looking for it to continue, hold higher lows. We're coming out the back end, so it's been a couple of months through May, contracting, washing out a few of those buyers, bringing in some fresh people on the sidelines for continuation higher. So really, that's a continuation trade. Maybe it's a bit late. It's just into a major resistance zone, but the reason why we like it, if this, I'm just trying to explain the differences when the market hasn't corrected or hasn't had some form of complex correction prior to a level, it's a lower probability trade. But when you come into a major level, 1770, we have this little complex correction that washes out a few people. It puts them back on the sidelines, potentially to jump back in and be that fuel to take it up and through that resistance zone at 1770. We could have a pullback, Will, but it's just one of those things. What we've done is put ourselves into a zone. If we do have a pullback, we may have a small loss in that, but we're taking the view of what we've seen in the past, and what this goes back to, I guess, experience as well. Seen it when it falls short of a key zone, complex correction, holds a high low, the bang, they tend to just blow straight through it. So it's just washing out some people prior to a level, and then bang, up and through we go. Yeah, like I was saying, that if we didn't see that and it was just higher highs, higher lows into a zone, I would expect a reaction off it rather than what we've just seen. I'm more inclined to believe that it's going to blow through it, and that's why we've taken the trade pretty much, if that makes sense. I hope that helps. It's probably getting a bit more complex. But anyway, LLCs, we've done that. We've now got DDR, is that right, Clement? All right, what do we got? It's DDR. So let me know if it's not making sense, Will, and we'll... That's good. Oh, here's another one that potentially missed. See, this is great. This is where I'm just trying to explain. So what we... I'm starting to get myself confused now. Why I like this as opposed to... There's a lot of factors here. What we just talked about, if you remember, a complex correction here has got to break an anchor. And what we've done here is broke that anchor, pop up, we get these contraction low. We want to see that high low. Here's probably a good example of this is your move up. We broke through that anchor just on this pullback through 220. It's popped back up and just below the highs again. So it's just probably what we talked about. Below major highs, it's done a lot of work, and that hasn't had a big range in context of what's happened previously. It spent a good part of May, June, half of July. That's 2.5 months of just chopping around in there. And then you get why I really like this trade is, and I hope you're long this, Clement. Are you actually, you've jumped in? There's quite a few factors that have built up. So you've got a level through here broken. It's hit the highs, broke through, it's washed out. So that's what that's done there, that move up. Anyone's probably bought it in here looking for a trade up through the highs has been flushed out there, and any people bought it through here have been flushed out potentially. You know, they can sit and hold it, but that's not the good, you know, it's not the best way to trade if you're just going to sit and hold. I mean, that could easily roll over and bang, you're sitting on something. You could potentially be sitting on it for years. So that's why I like to think that people are using stops today, using exit levels, using a plan. So that's a flush out. It's put, what it's doing, like we said time and time again, it's put more people on the sidelines. Fantastic. Fantastic, Clement. It's put a lot of people on the sidelines for fuel to move that market higher. Now, at this stage, you don't really want to buy it just yet because that hasn't proven anything just yet. It's just really, and we could roll over from there again. We could do this type of price action, lower high, bang, and off she goes down, taking out this low and then continue and lower. The reason why I like it is if what you can see is it has made sort of some lower highs in here and then taken out the low. So it's washed it out again. And then we popped up. We've really popped up to that level through at 245. Then we're holding these high lows, and that price action alone is just awesome. So I really like to see that after what we've seen, a flush out. So we know that people put it on the sidelines. We know that there's potential more fuel. People are just put it on the sidelines here that may have bought it in here, preempting it, been flushed out with this sort of move down to 230, getting a bit sick of it, and then you get this pop up to 245. That's a high low. As you see this type of price action, some minor high lows. I mean, it's quite clear buying where Clement did at 247. So that's looking nice. So from there, you just really got to extrapolate out where it could be going to, or you just really tighten up your risk. I mean, your risk here, say 247, just below that 240 mark. You've got about 1.5 to 1. It could easily just keep going from there. It looks good. It looks really nice. Does that make sense there, guys? What we just explained there, what we went through? Any questions? Probably have to knock it on the head now. Anything else you want to quickly look at before we call it a day? Just going to go back and see where we are. If not, all right, nothing to chat. What we'll do, we'll finish it up there, guys. Thank you very much for joining us. Hope you enjoyed that. Any questions? If you've got some questions, if you're reviewing it later, and just about, especially about price action and the structure and what we look at, if there's something that's not quite sinking in, feel free to send us through an email too. support@tradesetup.com.au, and we'll endeavour to get back to you there. And Paul, if you're listening, I'm just going to get back to your email too. I tend to do that a few days late. But anyway, yeah, thanks for joining us, guys. What we'll do, we'll be back in on Monday. Have a great weekend, and we'll chat to you there. See ya. Bye.